Good day, this is Donvic FX. Welcome to my channel. Please do well to subscribe and like and also comment if you find this video educative. Thank you.
Hello, today I'm going to be showing you all how to trade crash and boom, how to predict spikes using RSI, that is your relative strength index. As we all know, going against the market requires technical analysis. Yes, in order to predict these spikes, let me go to my M1. This red spikes you see over here, it requires technical analysis, and you need to be sure of both your entry point and your exit point. There are so many indicators out there that gives you such entry and exit points. But this strategy I want to show you using your RSI remains one of the best that you can ever think of or you can ever come across. Please try as much as possible to practice this and backtest it. It is very important if you sit down to backtest it, please. It's very, very, very important. Now, when using your RSI, please take note of three key levels, which is your level 70, level 50, and your level 30. See your RSI over here. Take note of these three key points, level 70, level 50, and your level 30. These three key points are used to determine support and resistance. Level 70 is known as your overbought zone. Level 50 is known as your mid zone, and level 30 is known as your oversold zone, as the case may be. When we talk about oversold, it means what? The sellers have what? Sold enough. I mean, we have reached a stage whereby they need to what? Reverse. When we talk about overbought zone, the buyers have overbought and they've reached a stage where it needs to what? Reverse. Then we come to our what? Extremely overbought zone. Now, extremely overbought zone is your what? Level 90, while your extremely oversold zone is your level 10, excuse me, your level 10 zone. Now, when working with your RSI, please take note of these two particular time frames, which is your M5 and your M15. Your M5 and M15 time frames are vital time frames that should be used when predicting spikes. It works better with your M5 and what? M15. That is to predict spikes accurately. Yes, it works better with your M5 and M15. In some scenarios whereby the candlestick, for example, let's take crash 1000 as a case study. For example, whereby the candlestick is an uptrend. Yes, it's an uptrend and it passes your M5 and M15. You should be watching our M30 and H1. But always know that this level 70, level 50, and level 30 are three key fundamental zones when trading the forex market. As you can see, these coming spikes over here. Let's check our M5. Good. See exactly when it was reaching the overbought zone, it fell. And when it had already reached the mid zone, it was fell. So now I want to show you how to accurately predict this. Let's go to our M5 first as a case study. Now, the something you guys need to learn or you guys need to take note of. Whenever your RSI, which is this blue line, which is this particular spot, this red line, which is this level 70 spot, please, you all should what? Take note of this thing. Whenever it reaches the level 70 zone, Before entering market, wait for approximately 10 minutes. If you notice, where this line hit this particular spot, hit this market, was at this spot. So if we wait for exactly 10 minutes, we are using M5 candlestick now. That's one, two. And it's at this particular spot we should be taking our trade. At this particular spot here, we should be taking a what? A sell. One thing you should always know that when you wait for 10 minutes and you want to take a trade, always use risk management. Yes, always use what? Risk management. Why do I say always use risk management after 10 minutes of waiting when it hits the overbought zone? Now, there's something we call confirmation spike. Yes, confirmation spike. That confirmation spike makes you to understand if the market is going to keep on falling or is just a pullback. And also the use of using ROM is just in case the market was delayed. But one thing we should always be sure of that it is going to what? Spike. It is going to do what? Sell. That is one fundamental thing that we should always be sure when using our RSI, that it is going to sell. Remember, let me come again. Whenever you notice that your RSI has hit with your level 70 zone, wait for approximately what? 10 minutes. Approximately 10 minutes. 1, 2. At this zone, what happens? We take a sell using risk management. Why do we use risk management? Just in case there is a delay. Just in case there is a delay in the market, you would end up what? Losing so much. Let's say, for example, 10 minutes delay or 5 minutes delay. You would end up losing much. Second reason why you should use risk management is we are waiting for a what? Confirmation spike. A confirmation spike helps us to understand if the market is going to what? Fall or what? Or not. So as this scenario happened, this was the confirmation spike that we needed. This was the what? Confirmation spike that we needed. Remember, whenever it hits this spot, it must always what? Keep on falling. Like what you see over here from this very spot like this. It will always keep on falling. So this was the confirmation spike we needed. When this confirmation spike was gotten, okay, let's trace it. That was in 1800. Let's trace it to our M1. Yeah, this is exactly 1800. Now, whenever such confirmation spike occurs, what do? The next thing you do now is to what? Trade using your what? M1. What do I mean by M1? Use RSI on what? M1. That is where your confirmation spike occurs. Remember, the first thing you do is what? Analyze using your M5. You analyze using your what? M5. When your M5 gave you the confirmation spike, which was this you needed, you go back to your what? M1. And please, when trading that, always ensure the trend of the market. Always try as much as possible to ensure the trend of the market. If it's in a downtrend or if it's in an uptrend, always try as much as possible to determine it. If it's in an uptrend or if it's a downtrend. If it's in a downtrend, it gives you more precise accuracy than when it is in an uptrend. Yes, it gives you more precise accuracy. For example, I went to my H4. Let me see if I can trace see it was already on a downtrend at this particular spot. That means it was so obvious that the sellers will what? They push price down because there was no resistance spot at this very spot. This is where your 1800 met. This is where your 1800 actually was met. So it was so obvious that what it will hit. This is my resistance line. This over here is called my resistance line. I do this resistance line from two what? From two. I do this resistance line from two known points. Yes, using my D1. From two known points using my what? D1. When you want to draw your resistance line, you draw it from what? Two known specific spots. Now, like I said, when you're using your RSI, make sure that the trend is on a what? Downtrend. Even if it's not on a downtrend, you can still accurately use it. But it's more precise when it's what? On a downtrend. What do I mean by it's more precise? That means it occurs often. For example, out of 100% of trades, if it's going on a downtrend, 98% of trades will enter. But if it is not going on a downtrend, 87 or 85% of trades will enter. Now, like I said, after analyzing your M5, and you have taken a trade, let's say a sell trade, and your confirmation has been met, you go to your M1. When you go to your M1, what you need to do when you go to M1 is to what? Use this RSI. Note this key level 70, 50, and 30. Now, when you're taking your risk management, your lot size, your risk management lot size, you come to your M1, or better still, you can still first of all check your M15. Let's check our M15. Okay, this was our 1800. Now, this alone, using candlestick formation, will tell you that yeah, there's a resistance at this particular spot. That if you understand your candlestick Bible very well, I'll be doing a video very soon about candlestick Bible, so that you all will be able to understand the structure and form of each market. This will tell you that there's going to be a what? Resistance which will push price down. Now, after knowing this, you can go to your M1. Now, remember you are on ROM on this trade. You're on risk management. This is your what? Confirmation spike. This is your confirmation spike. Now, when this occurs, what do? You keep on. You leave. You can leave the trade in profit, or better still, you can still close it and wait for a what? Second confirmation. It is this second confirmation that will tell you if this market truly is going to keep on falling or is going to keep on what? Buying. And then we should take note of something. If the second confirmation occurs within your level 70 to level 50 zone, then we are sure of series of spikes like what you see over here. For example, this second spike that occurred, which would have happened to be your second confirmation, happened in your level 70 zone. Sometimes it happens in your level 50 zone. But when a trade, get something, when a trade is just starting to fall, or when a trade is just beginning to start spiking, the second confirmation always comes up at this level 70 zone. Please take note of this. When a spike occurs, your first confirmation occurs when you use your RSI. Your second confirmation always tends to occur at this level 70 zone. Please take note of it, especially when it was formerly on an uptrend. Your second confirmation always let me say 90%, your second confirmation always occurs in this your what level 70 zone. Please take note of this. In terms of M1, whenever it hits this level, your overbought zone or your oversold zone, you can wait for like approximately what 1 or 2 minutes before you take a trade in terms of M1. But in terms of M5, please take note of this. Wait for 10 minutes, approximately 10 minutes before entering a trade. But in terms of M1, wait for like 1 or 2 minutes, as the case may be. So if you take a look at this now currently, take a look at this currently, please. You see that this was your second confirmation. This strike case was the second confirmation. And what happened? It occurred when it hit this was level 70. So depending on whether it hit this level 70 zone, we are rest assured of what series of spike. How are we also rest assured? Because sometimes whenever this second spike occurs and it hits this oversold zone, it ends up reversing. Yes, in some cases, whenever this second spike occurs, whenever this second spike occurs and it hits this oversold zone in M1, it ends up reversing. But then that is when your M5 comes in play. Yeah, this is where your M5 comes in play. If you notice, it fell down once, and immediately it fell down once, it already beat this mid zone. Whenever a trade beats this mid zone, let's say it was finally on an uptrend. Yeah, this is where it was finally on an uptrend, and the spike occurred, and it was able to beat mid zone. Please always take note that it will keep on what it will keep on falling, or it's going to fall one or twice. And please combine this strategy also with the strategy I showed you guys in using Bollinger Bands and moving average. Yes, combine this strategy with the strategy I showed you using Bollinger Bands and what moving average to know when it has reached resistance and what support zone. Now we have used our M5 to ensure that yes, it's going to keep onwards fall. We can also use our M15 though, which is what this, which is what this. So let's go back to our M1. That was exactly what led to what all this fall you see over here. As you can see, it kept on what falling until it reached this extremely oversold zone. This extremely oversold zone in M1 was what made the buyers to what take over for some time, making it to what get delayed. At this very spot, after seeing the second confirmation, and you have checked your M5, you can as well decide to what take a what sniper. You can decide to do what take a sniper. This is the best method I do usually use when I want to what take a trade. This is the best method I usually use when I want to take a trade. At the end of the trade, I will attach a video showing how I do take trade using this strategy. Yes, I'll attach a video showing you how I do take trade using this what strategy. Let's say a 30 seconds video that I have made before showing you all how to what take trade accurately using this what strategy. I actually say this is one of the best strategies when it comes to what spiking or taking the market accurately. Remember, I said first of all use ROM to get your what confirmation. I think let me just do a brief summary of what I say of what I have said. First of all, when you enter the market and you want to use your RSI to trade, the first thing you need to do is determine if it's in an uptrend or in a downward trend. You can use your higher time frame like your H4 or your D1. H4 means 4-hour candle. D1 means 1 day. Please take note. H4 means 4-hour candle. D1 means 1 day candle. your H4, for those who are new in forex, H4 means 4 candles of what? 1 hour. 4 candles of 1 hour makes this what? 4 hour candle. 4 candles of 1 hour make this what? 4 hour candle. Make this 4 hour candle. 4 candles of 1 hour is equivalent to 1 candle of what? 4 hours. So you can determine the trend using your what? H4 or H1 or even your what? D1. But most especially H4 and what? H1. That is the first thing. Determine if it's on a downward trend or if it's on an upward trend. If it's on a downward trend, you have a better option or opportunity. I should tell you that you'll be entering series of what? Successful trades. So if it's on a downward trend, like you see over here, this is a downward trend. It's a what? Downward trend. This is an upward trend from year to year. It's an upward trend. The upward trend got reversed at this particular zone, which is your what? EMA 200, exponential moving average 200. This was what was pushed this price down. Like I told you all in the class I had, that this is a very powerful tool. This exponential moving average 200 is very, very powerful when it comes to what? Predicting spikes or reversing the market. So because of this EMA 200 that the market got what? Reversed, which led to what you saw over here. So knowing this, you know that this is what? Exactly a what? Downward trend. And I will teach you all how to draw this trend line. This when I mean trend, I'm talking about, sorry, this resistance line, so that at every point when it beats your resistance line, you will take note of it. Because whenever it beats your resistance line, it's always difficult to what? Climb back up. So from what we saw, this is a what? Downward trend. Now, when it is a downward trend, what do? You have already determined whether it's a downward trend or an upward trend. Then what do? The second thing you need to do is to go to your M5. Remember, we are using M5 to what? Determine spikes. We are using M5 to what? Determine spikes, whether it is going to fall or whether it is going to buy. Please, this strategy I'm talking about works for both boom and what? Crash. I will still go over to the boom video to show you a bit of what I'm talking about in boom, just in case for those who don't understand, because what happens in boom is the same thing that happens in crash, but in an opposite direction. In a what? Opposite direction. I will show you what I mean by that. Now, like I said, whenever your line, your RSI line, hits this level 70 zone, let me show you here also as a case study. Wait for approximately what? 10 minutes. I remember I used here first of all. Now let me show you how accurate this strategy is. Let's take for here as example also. This was at this spot. So at this spot it hits your what? Level 70 zone. Now at this particular spot, let's count 10 minutes. This is 5. This is 5. This is 10. This is 5. This is 10. 10. Then at this particular spot, you take your what? ROM, risk management. Take your what? Risk management. At this particular spot now, you can see that the spike occurred earlier than here. So your risk management actually gives you, it can occur in the next 5 minutes or what? 10 minutes, depending on how the market wants to delay. Yes, it depends on how the market wants to delay. But one thing we are always sure of is that it must surely what? Fall. Yes, it must surely fall. It's a must. Like it's a must. It must surely do what? Fall. But at this point in time, if you look at this particular spot now, this was where it occurred. We say let's count 10 minutes, which is 5, 10. And so at this spot, we'll take our what? ROM. waiting for the what first spike, waiting for the what first spike. So it's the first spike that occurs that would what give us an insight if the second spike is going to be what, if the second spike is going to occur. When the first spike occurs, you can decide to what close your profit and wait for the second spike. Remember, in forex you can't get all the trades. No, you can't get all the what trades. 3 or 4 trades can get you your maximum profit for the day. Yes, you can't get all the spikes. Spiking is technical analysis. So you can decide to close your trade and wait for the second confirmation, or better still, you can still say, okay, I want to leave my trade to wait for the what second confirmation. But make sure that your first confirmation was the taken with what ROM. Now, when your second confirmation is what gotten, that is when you can now decide to use what we call sniper entry. That means using a lot size that what you can or you are willing to what risk. Maybe you decide to what take it all out, like the video I did in my in the ending part of this video. You can decide to either take it all out, like take your one of your highest lot size, or you can decide not to take your highest lot size, as the case may be, depending on what you want to do. Remember, I said you first of all wait for your what second confirmation, and then in order to know the second confirmation, or if for example you still want to trade on this second confirmation, go on your M1. Go on your M1. When you go to your M1, always take note of this key level, level 50 and level 70. You can decide to start taking your trade at your what level 50 zone. In some cases, it keeps on spiking at your level 50 zone, but if you see what happened there, it was broke out. So at this particular spot, if you decide to take a trade, you can take what ROM, risk management. That is why I said your second confirmation and your first confirmation should be taken with what risk management. Or you can decide to what leave your second confirmation until you are sure that yes, it has occurred. Then when it occurs, you will not be sure of what other what sell trends. You cannot decide to take it all out on other what sell trends. Please take note of this particular thing I just said. As you can see, it kept on what spiking. And when it now reaches extremely oversold zone, please, whenever you are spiking or you are selling and you have noticed that it has reached extremely oversold zone, let's say for example in M1, if it has reached extremely oversold zone in M1 but it has not reached extremely oversold zone in M5, please always note that this M1 will be a delay. What do I mean a delay? It's still gonna fall, yes, sure, it's still gonna fall, but there's gonna be a delay for like approximately what 5 to 10 minutes. So when you notice that it has reached this extremely oversold zone, you can decide to what close your trade and reopen in the next what 5 to 10 minutes, approximately 5 minutes. That is if it corresponds to your what M5. If there is still space between your oversold zone and your extremely oversold zone, and you have analyzed that it's going to still keep on falling, you can now take it after what 5 minutes. Why? Please always take note of this thing. When it reaches your extremely oversold zone in M1, please take note of this. When it reaches your extremely oversold zone in M1, please try as much as possible to close your trade and reopen again in the next 5 to 10 minutes. Please take note of this. This extremely oversold zone indicates delay. It indicates there was delay in the market, most especially when you use what sniper and you wouldn't want to lose your what recent profit. You can close your trade and reopen afterwards 5 minutes whenever it hits this your what extremely oversold zone, because it is very rare for it to what pass this extremely oversold zone unless in what rare cases. As you can see, it happens to be that the thing reached this what mid zone. In some cases, it keeps on spiking at this oversold zone. That's why I say after 5 minutes you what take trade. At this particular spot at your oversold zone, you can decide to what open a trade, open a sniper, and then it will surely come into what profit as you see over here. Exactly what I said there now occurred at this spot. It kept on spiking at this your oversold zone. Now let's take a look at this next spot again. Like I said, you will notice that this strategy remains what 95% accurate. When it reached your extremely oversold zone again, what happened? There was what delay. As you can see, there was what delay. You can decide to take it at this spot again. When you see it has reached this extreme oversold zone, you can decide to close your trade and take trade at this what particular spot again. And that is before taking trade at this particular spot again, you need to first of all analyze if it was going to work out effectively or not. How will you analyze it? Using your what M5 and what M15. Let's take for instance, let's see where that spot occurred again. Okay, at this spot, let's see where it occurred. Let's see, the spike occurred at 1850. If you look at it down, there's also date and there's also time in the black spot 1850. Let me draw it back to my M5 1850. I checked exactly at this particular spot. That was when the spike occurred, the last spike occurred. Now looking at this particular spot here, in order to determine if this thing is going to keep on falling, because as we do using our strategy, it has already was broken out from this from this lower Bollinger band. This last green line you see here could not what hold it, and our strategy states that a scenario whereby these candlesticks can break out of our lower Bollinger band is going to be a series of sell. But whereby this candlestick can't break out from it, that means it's gonna act as a support to push price was up. But as you can see, it broke out of it. Now to be sure if it's going to reverse or not, let's check our what M15. Let's check our M15. That's 1850. Okay, as you can see, this is where it occurred. And at this our M15, it has already was broken out of this what lower Bollinger band. That was what was signified that the fall would be what obvious. So when you've analyzed using your what M15 and M5 using the strategy, you'll be sure that yes, this particular spot is going to what fall. So you can decide to what open trade again at this particular spot. When you open trade, something like this might occur, this tiny thing. Yes, or in some cases it won't even occur at all. But if it occurs, fine. If it doesn't occur, that's fine. But after your analysis, you're going to be very sure if what is going to spike again. And if you open trade at this spot, as you can see, let's say you took trade at this spot after this fall, you see that you will be in what huge profit from this what two spikes that just occurred. As you can see over here also, when it reached your extremely oversold zone, what happened? It started buying again. Now the question is, why is it that your mid zone couldn't what fall this thing down? Why couldn't it spike at this mid zone now? That is where I said your M5 and M15 comes in play. Now let's trace this candlestick again back to our M5. This is 1914. That means it should fall between 1910 to 1915. Okay, this is our what 1910. Yes, this is where the fall came from. 1910 to what 1914. Now, using the strategy, when it occurs, it needs to meet another what resistance. And if you notice your moving average, if you follow the strategy well, you will notice why your moving average was able to what cause this little spike that occurred here. Because why? Your moving average acted as a what? Resistance in pushing price down. Now, why didn't this particular spot here keep on falling? Let me give you the reason why it stopped falling. Because it had already passed your oversold zone in your what? M15. It had passed your oversold zone in your M15. It's very rare for it to reach your extremely oversold zone. So in a scenario whereby you see that your trade has already reached your oversold zone in M15, please try as much as possible to stay out of that trade because the probability of it occurring is rare. Remember, I said you can't get all the spikes. So the ones you get, fine. The ones you can't get, fine. A successful trader cannot get all the spikes. That is just one thing about trading. You can never use all the opportunities in trading. No. The aim of trading is what? Maximization of profits and minimizing of loss. So in order to properly take trade, you need to what? Sit down to analyze how to what? Appropriately use technical analysis in what? Catching the spikes. So whenever it is your oversold zone, please try as much as possible to what? Stay out of the trade. The same thing flows with your overbought zone. Whenever in your M15 it has hit this level 15 mark, please try as much as possible. It is very important. It is very, very what? Important. Try as much as possible to what? Wait for 10 minutes before you what? Take a sell. Let's trace it using our M15. That is 9, 10. Okay. See it over here 9:10 to 9:15. Your moving average what? Acted as a what? Resistance. And you can see why it stopped spiking was because it has already passed your level what? Level 30 zone. It already passed the oversold zone. And it's very rare. Sorry, I was in my M5 before. It's very rare for it to pass your what? Oversold zone. If you look at it very well, you will see that it hardly passed. So whenever it reaches your oversold zone, try as much as possible to what? Stop trading. Because the tendency of it passing it is what? Very close. It's very rare. And it determines whenever it reaches this oversold zone, it means that it's going to what? Keep on buying. That means the buyers want to what? Take over. Like you see, that was exactly what happened at this very spot. The buyers sell what? Taking over. That's why you can see that from here, the buyers were trying to what? Push price up. And as you can see, when it reached your mid zone again in M15, what happened? It led towards these spikes. So please take note of it. The same thing happens, the same thing goes for this your overbought zone. When you see that the buyers have bought to this very extent, you can as well take a sell. Yes, you can as well do what? Take a what? Take a sell. I'm trying to look for a scenario, but if you notice currently now, your M15 has been at the range of your what? Overbought zone, as you can see it. See it over here. Whenever it hits here, what happens? It's always a spike. It's rare for it to keep on what? Moving forward. Please take a look at it as I'm moving small. Whenever it reaches your level 70 zone, what happens? There's always a fall. Please take a look at it very well. So as you can see, this strategy is what? 100% accurate. I just showed you an illustration using your what? Crash market. Now, let me go. Please, this strategy I just said, of course, for both crash 1000 and what? Crash 500. Now, let me go to your boom market as a case study also so that you all will be able to understand what I am saying. This is your M15. Now, why I said it's the opposite in terms of boom is that remember the strategy works for both boom and crash, but it's opposite in the sense that this is your oversold zone. That means remember in boom, if you want to spike, we are what? Buying. So whenever it reaches your oversold zone, what happens? That is when you what? You spike up. You buy, you buy, you take a buy trade, and it always ends up in what? Profit. It's the same conditions that happens in your crash, is the same condition that happens in your boom. Everything is the same. If you notice, when it hits your level 70 zone, no matter how it's in an uptrend, whenever it hits your level 70 zone, there's always a what? Reversal. It happened exactly in your M15. You can see it. You can see it over here. Whenever it hits your oversold zone, what happened? There was always a what? A spring up. Even if it's in a downtrend, as you can see, even when it was in a downtrend, when it hit here, what happened? The buyers was took over. The same thing happened there again, though at this point in time there was a bit of delay. But yet you still have ended up in profit. As you can see, it's very clear. So please try as much as possible to what? Train yourself using this strategy. This strategy can help you become one of the most profitable traders you can ever think of. Please, this is the strategy I do usually use in what? Getting my profits at the end of the day. So I'm going to be showing you all a video of how I took a trade concerning this. I'm going to attach it to the ending of this video now. So please try and watch as possible to see what happened at that particular spot. You will see the aim of the video is for you to understand how I took the trade. I stay with my ROM. From my risk management, I increase it towards sniper entry, which got me so much what? Profit. Please always use the lot size that fits your account size. Don't ever over leverage your account. Over leveraging your account can lead to what? Blowing of accounts. Even if you want to snipe, I mean snipe, if you want to take a huge lot size, take your lot size in a reasonable way. Thank you. I'll be showing you all the video right now. Okay guys, look at this. Look at this. So many trades taken at once. The accuracy in my strategy, like the sexy accuracy, and there's the profit. The profit, wow, $483. Forex remains the best. If you are not a forex trader, you're missing out. Please try as much as possible to key into this opportunity. Thank you.
If you love this video, you can as well like, subscribe, and comment on it, and also share to your friends who are also traders. Thank you so much, and have a blessed week ahead. Thank you.